What's up, traders? So welcome to another weekly market analysis. This one is coming to you on Tuesday, 3rd of March, and it is intentional. As you always know, I always do my market analysis, weekly market analysis on Sunday, and it goes live on Monday. So, but this one is coming to you on Tuesday because I saw it wise to just give the market one day to cool down because of the ongoing geopolitical events that have been caused by the war by the US, Israel versus Iran. So yeah, during those kind of geopolitical events, then the market always makes some crazy moves, which can causes a lot of volatility. As you saw even yesterday, the market opened with a lot of gaps. So these are kind of moves that may either cut way across either positively or negatively depending on how you react to the market. So in such uncertainties, I always choose to stay away from the market a little bit, or rather to reduce my risk of exposure. Now let's go over to the pairs, or rather the markets that we're going to be looking at for this particular week. We'll start with the economic calendar. So for this week's economic calendar, you must be aware that we have some heavy impact news cutting across all the currencies, and I think the highlight of the week is going to be on Thursday and Friday. Friday, remember, we have the NFP. So that is it for the economic calendar. Now let's look at the what. Let's look at the dollar index, DXY. So DXY, yesterday was very bullish, and right now market still is very bullish. So we have already approached a daily key level of supply from the daily level, as you can see. So looking at what we are having on the dollar index is that if at all the market breaks the current level, then it means that our next target is going to be this price level, which is higher here. So if at all we are able to get a reaction, because price is currently sitting on that particular supply zone.
Have you had all the Forex hype online? Flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner-friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, 2nd floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
Going to the 4-hour time frame, let's see what we have. So the market is still reacting to that level. So going to the 15 minutes, let's see what we have on the 15 minutes. So if at all the DXY is able to do this current break of structure, then it means that we will be heading higher. And if at all the DXY again is not able to break that level, then we will be looking probably at a break of this last lower high, or this one. This one, to be specific, this one would be the level that I would like to see broken before we can go short on the DXY. However, from the look of things, it looks like the market is really bullish. So my bias is still that the dollar index will be able to break this current level, and once we break this current level, of course you must expect some pullback onto this zone, then before we can mitigate the upper supply zone. So that is my forecast on the DXY. Now let's look at EURUSD. Now EURUSD very much bearish at the moment. From the daily perspective, this is what we are having. Yesterday closed very bearish. So the same case for today, that I expect that DXY is going to be still bearish. As you can see, this is my long-term projection for DXY. So I expect the DXY at least to get onto these levels. Now the question is when and how. So now let's look at the 4-hour time frame. So actually, we are not very far away from this daily zone of demand. We are only 45 pips away. So if the market is able to find momentum, then it means that we might be seeing the DXY mitigating that key level by the end of the day. And if at all this push of lower sustains, then it means that we will be looking for buy confirmations from this level, at least to facilitate this pullback to this previous supply zone, which has also a gap on this level. So this is what I am expecting on EURUSD. EURUSD, we're gonna be pushing down lower for the day, and if at all we are able to get onto this demand zone, then it means that we can be able to look for buy confirmations to take the price to facilitate the pullback to these previous supply zone. And if at all that the supply zone is able to sustain, then it means that we can get a push, either push lower, or also we can see the market breaking to the upside. So it depends on how the market reacts. Of course, we want to see what the market is doing before we can react. So our work is not to predict, but rather react accordingly. Now GBPUSD, almost the similar scenario. Now the problem, the difference is that on GBPUSD, all these levels here from the daily zone are already mitigated, or rather filled or tested. So therefore it doesn't give me so much enough confidence in making any trades on GBPUSD. But if you would rather trade the support and resistance areas, then these two areas are to watch for GBPUSD from the daily time frame perspective. So so we have a potential of reacting from these key levels before we can see the market pushing probably higher onto previous supply zones. And talking about supply zones, then this would be a key level that you would be interested in if at all the market pushes higher, or anywhere into the premium zone once the market is pulling back, or rather once the market reacts on the current support zone. Then you might also be looking at maybe probably this level, or the extreme supply zone. Now USD JPY. So USD JPY, remember that we had already highlighted that this will be a key level of reaction for USD JPY before we get onto the extreme supply zone that is just right above. So I expect the market to take out this level actually by the end of the day. Therefore means that there's a lot of liquidity lying above this zone. So we are here to see convincing what the price actually went just some few pips above. So it means that that validation of that break of that particular key level is evident that price is also willing to push higher. So even from the 4-hour time frame, you can see that we had the break of structure going up at the moment. So we have that break of structure. Therefore, if at all price is not able to break vigorously from the current level, then I expect a pullback onto this zone over here, this demand zone. Then we can look for buy positions going up to push the market to this daily supply zone, where of course we're gonna see some major reaction going forward. Now let's look at the Euro JPY. So Euro JPY, now I expected price to go deeper into this level here, but it seems it's a daily supply zone, but it seems that did not happen. Now I am left now looking at what we are having on that level. We have some pretty imbalances which are not really major. I'm not sure if these imbalances can be able to pull price going higher, because right now you can see price is already reacting almost immediately. So actually in my thinking that I would like to see this level here acting as liquidity before, because right now people who have already gone short, probably their stop losses are up there. So I would like to see that level acting as liquidity before price reacts here. But even before we get there, looking from the daily time frame perspective, you can see that we had a very major push up from this level here. So we have a daily demand sitting down here. So and by the fact that the market is currently pulling back to this level, then this is an area that I would really be interested to consider buys for Euro JPY. So before we can take out this liquidity over here, then get some good reaction on this level before we can go down on EURUJPY. So we also have GBPJPY, but there is no clear price action on GBPJPY. So I intentionally choose to stay away from GBPJPY simply because of probably this candle here. It's causing some confusion. There's no really good price action that I would really like to trade from that one. And maybe you can also look at the yen basket, JPY basket. The yen basket, yes, the yen basket is the one that shows the trend, just like the DXY shows the strength of the dollar. The JPY, the yen basket shows the strength of JPY currencies. Now, looking at the JPY also in relation to what we have just analyzed on the JPY pairs, we are currently sitting on the on a H4 demand zone, but I am of the opinion that this demand zone, we might see price breaking this level, and actually this is what is going to be determine also the direction in which the yen pair is going to take. So if at all we are able to break this level, then it means JPY is selling. And if JPY is also selling on the yen basket is going to be dropping down, then it means we will be buying GBPJPY, EURUJPY, and any other pair that has that combination of JPY. So just stay alert. I think we have some high potential setups on what we have already analyzed. Just stay alert and watch for your levels. And once the market shows you enough confirmations for your triggers, you can take those trades. Other than that, guys, stay safe during this time of unprecedented volatility in the market. Stay safe. Use proper risk management, and I wish you a happy and lovely trading week ahead. Thank you so much. Bye bye. See you on the next one.